one of the things that the CEOs are looking for is a bilateral investment treaty. All of the American CEOs that are taking part signed a letter to President Obama and President Xi asking that such a treaty be signed and put into full effect. What do you think the chances of that happening are?
I still think they're low in terms of imminent breakthrough, but I hope I'm wrong. There's not a lot of ground to be optimistic on too many of the main issues of this important summit between the two leaders, and this may be one area where there's some wiggle room. Market access is absolutely key as China stimulates domestic demand, especially consumption demand, and grows the largest middle class in the world. And U.S. companies certainly want a piece of that. A bilateral investment treaty is a very important device to enable that to occur.
Stephen, there's going to be a lot of platitudes between the two sides and what President Xi is going to say throughout his visit. Is there anything that you believe will fundamentally change in relations between the U.S. and China after his visit?
Well, Betty, I think there are a lot of issues on the table right now, from territorial disputes to the slowing economy, some of the currency and trade issues. But the one that's really boiling over right now is cyber. And, there's a lot of talk that there may be a deal struck on cyber warfare, high-level exchanges on this issue. But in the same sense, it's pretty clear that the U.S. is about to impose sanctions on a number of high-profile Chinese companies for the outrageous cyber hacking that was uncovered just recently. So how we make progress on this critical issue, which really defines the fabric of engagement between two nations and the rest of the world, that's a bit of an important sticking point in my view.
Sir, speaking of sticking points, let's go back to August, the currency devaluation. Is that something that's on the minds of the business leaders, or because the devaluation was so small, is that a non-issue? Is it a non-starter during negotiations?
Well, I think, currency has always been an issue, especially in a presidential election year. But the movements to date, having been very small after a 10-year run-up of about 35% of the Chinese currency versus the dollar, do not appear to be an imminent threat. There are always those who continue to rattle on about Chinese currency manipulation, but until there's more concrete evidence that the Chinese are going to use the currency as a tool to really support a struggling export sector, then I think this is likely to be one of the least important issues on the agenda.
But when you say evidence, unless there's more evidence, what would we be looking for other than more moves to devalue the currency, Stephen?
Yeah, I think that would be it, Betty. Just further depreciation of the renminbi versus the dollar. So far, it's down, I don't know, 3 or 4% at most after a 35% run-up over a decade, and that's hardly a significant reversal of a much more important uptrend in the renminbi.
Do the tech companies, the U.S. tech companies, do they want to see movement from China on pollution, on climate change? Are the Chinese amenable to even having that discussion?
Yeah, look, a year ago at the APEC meetings, there was a very important joint announcement between the U.S. and China on emission standards, and certainly very consistent with the high priority that both countries now place on environmental degradation and climate change. And moving into the so-called Paris Summit later this year, I would expect that agreement of a year ago to be reaffirmed, no major breakthrough. But I think that for the tech companies, the big issue has got to be cyber, and those discussions are probably going on very actively right now.
And Stephen, before we go, I mean, just getting back to, the Chinese markets and how they behaved following, the depreciation of the renminbi, and people saying, criticizing the Chinese for bungling their intervention in the markets. Does that mean that the environment for foreign investors, the environment in China, that the investing climate in China is really that precarious, and it's something that we really need to watch for. It's going to be a major headwind in the next 12 months.
I think that's probably an exaggeration, Betty. I think the foreign multinationals are still very actively pursuing investments in China. If China delivers as expected and produces the largest middle-class consumption story in the world in the first half of this century, they want a piece of it. Having said that, the volatility in capital markets, especially the bursting of the equity bubble, is actually more disconcerting for the Chinese than it is for us, because it really is a major setback for them on the road to capital market reform, and they have not looked good in managing both the upside of this bubble and now the aftermath of the bursting of the bubble.